Hey guys, this is Rene. Welcome back for another video on this channel. And today I want to talk a little bit about my latest project, my latest strategy development process, and what my general idea was, how the program looks, and why in the end I will not use it. So this is the final performance of the backtest that I did with this strategy, and I will show you exactly how this works, because the general idea was that maybe you already realized that if you do hold positions overnight, you make money, right? Or you pay money. Like in most cases, you pay money, because you can have a look in the market watch. If you right click any symbol and go to specifications, you will see that there is the row swap long and swap short usually. And sometimes one of these values is positive. For example, for gold right now, it is positive for the short swap. So my idea was the swap overnight is higher or bigger than the spread that I have right now. Because the spread is 5 points, the swap is 20 points. So I make an average profit of 15 points, right? So it's a no-brainer that if I hold positions, short positions overnight, I make money, right? So this was my most basic idea. Then the next thought was, you do have this one day in the week where the swap rate is 3 times as big as it normally is, which here in this case is Wednesday. So my idea was, why not build a strategy that opens positions Wednesday very late in the evening and closes positions Thursday very early in the morning. So you do make a lot of money if the swap rate is higher than the spread, right? So this is what I did, and this is the outcome of the test from 2020 to 2024. So let me show you now how this looks in the visual mode, and then we will talk a little bit more about the programming of this strategy. So here we are in the visual mode. I will just show you how this works, how the strategy behaves, and then we will go directly to coding the strategy. So here you can see the test is loading, and the first day was the 3rd January in the year, where we can see that the trade was opened on Wednesday 3rd, very late in the evening, just before the day is over, and then on the next day, very early in the morning, this specific trade was closed, and there was a loss of 49 euro and 30 cents, but there was a swap of 59 euro and 13 cents. Of course, we also have the commission, so overall this was not profitable, it was negative. But let's fast forward to the next day, and the next day or the next Wednesday we can see the profit this time was still negative, but not as much as on the first day. So if we do this over and over again, the idea is that if we do see a lot of trades where the profit is not as bad as the swap is positive, then we should make money, right? And we just saw the equity curve before. Theoretically, this could work. This should work, right? So yeah, you can see here, like, of course, some days it's positive, some days it's negative. It always depends on the outcome of the trade. If the trade is very negative, it can eat up all of the profits from the spread, from the swap. If the trade is break even or positive, you will make money with the swap. So let's have a look at how to code this very simple strategy, and then I will give you some more thoughts on why I decided to not use this strategy, even though it might seem very, very good. So for the coding part, we will just have a look at this program that I've wrote before. Actually, I recorded a programming tutorial for this one, but the recording crashed and yeah, I cannot use it. So I will show the program again, but it's a very simple program. It's just, you can see it here, 30 lines of code, and that's the whole program. I will go through the program very quickly. I will not explain everything. This is not an absolute beginner tutorial. If you want to learn programming from the beginning like you should, check out the link in the video description of this video, and you will find a programming course which is 100% suitable for absolute beginners even if you never touched code before, you can learn MQL5 programming in just a few weeks. But here the programming tutorial for everyone who saw code before. So of course we will include the ctrade class, so we can create the object variable of type ctrade. This is what we will use to open and close positions. We do not need the onInit and onDinit function here because it's just like the very basic program here. Then we do have a loop here. This is for closing the positions. So we loop through all the open positions. We select every single position in the count pretty much. In the test, it will be maximum one position, of course. And then we check if the time of the current daily candle, the open time of the current daily candle, if it is greater than the time where this position was opened, which means that, for example, if the position was opened Wednesday evening, then on the next day, on Thursday, if we have the daily bar on Thursday, it will be, let's say this is the 3rd of January, then on Thursday we will have the 4th of January, 0 o'clock of course, and here we open at 24, let's say 58. So you can see that when we hit Thursday, the beginning of the daily candle is now behind or after the point of time where we opened this position. So this is a very easy condition where we can check if this position was open for more than one time. There are multiple ways of doing this, but I decided to use this because it's very easy and straightforward. So if we realize that this position was in fact open overnight, we close it. Really, really simple. So this is for closing positions, and then of course we have to open positions. So we will need a MQL datetime structure here, and this is just a normal MQL datetime structure. We initialize all of the variables in this MQL datetime structure using the timeCurrent function. So the current point of time is now stored in this MQL datetime structure. Then we can use this datetime structure to check the day of the week. We check if this day is the same day as the day where we get the three-time rollover swap, and you can check or get the day of the week where we get the 3-time rollover using the symbol info integer function for the current symbol or for any symbol, and then use the identifier symbol swap rollover 3 days, just as I did here. Then I also want to check if we currently do not have an open position. This is important, so we only open one position for every week. Then we update some of the variables in the MQL datetime structure here. So we say we want to have the latest possible position opening time. And this is because if we have a look again at the specifications of gold or of any symbol you want to use this for, you can read it here. So you can see we get quotes from 1 to 23:59. So this is why at 23:58 and 30 seconds, you could also say 40 seconds or 20 or 10 or 23:55. It's just like you want to get very late in the day, I think. So this is why I chose this point of time here, like the latest point in time during the day. And then I transformed the MQL datetime structure to a datetime variable and compared it to the current point in time. So I checked if the current point in time is greater or equal this time open time. In this case, I want to open a position. But I only want to open a position if the swap is positive. So here again, I check if the swap for long positions is positive or greater 0. Then I open a buy position. If the short swap is positive, I open a sell position. That's it. That's super, super simple, and it is enough to trade this very easy strategy. So this is what I did, and this is what I already showed you in the visual test. So this is exactly the outcome that you get if you trade this strategy. So you will make profits with the swaps, you will lose if you pay commission, and you will most likely make a loss with most of the trades. But overall, and here you can see the long-term backtest again, overall, it should be profitable. So this was my first thought. And then I did some more research. And there are some crucial points that might make this strategy fail. And this is why eventually I decided to not use it in a live account. And there are multiple reasons. First reason is what we just saw here. You do have the risk that you get very high negative trades. Because if you make a short trade overnight and you hold this overnight, chances are not very high, but there's the chance that if you have a short trade, the next day the market gaps and gets a lot of value. So for example, this trade, I looked it up, it was like a 1% gap positive and it generated a really, really big loss. We can also have a look at the backtesting deals here. You can see this one trade generated a loss of almost 3K. I mean, this would be kind of okay. I mean, like overall, we can still see this is profitable and everything. And yeah, this gap is especially because in the specifications, again, we can see we are not allowed to trade from like 0 a.m. or midnight to 1:02. So this is where the gap risk is coming from mainly. So this is the number one problem. The second problem is that the swap, it changes. It always changes over time. And right now we do have a very high positive swap for short positions. But this is usually not the case. And the problem with MetaTrader 5 backtests is that the historical swap rates are not stored in the data for MetaTrader 5 backtests. So when you do a backtest and you hold positions overnight, it always calculates with the current swap. So every single trade done here in this backtest has the same swap. This is why in the backtest we only see negative or we only see sell positions, and all of these positions, wait, let me list it like this. So we only see sell positions, and all of these positions generate nearly the same swap because it takes the current swap, but this is not realistic. And I found a website where we can see this. So we can go here. I think I found it here in this forum. Yeah, I found this website. So you can see this is a website where you can say the historical swap rates. And this is not exactly the same as, so the swap rates are not exactly the same as they are with IC Markets. IC Markets has a slightly better swap, but in general it should be equal. So you can see right now that the short swap is very good for us. But if we go back and let's see, let's check the beginning of the year. The swap was way lower, 25%. Let's go even further back, maybe mid 2023. Okay, swap is still kind of equal, but let's go even further back. And here we can see the swap is currently negative. So every day the swap can change. And you can see sometimes the swaps are like both directions are negative. Sometimes if I will search some more, we might find a positive long swap. But this huge positive short swap that we see right now is very unique. So most of the time it's not that high. And this is where we find another big problem, because this test that we did here, and this is pretty much the problem number 3 that we have, we cannot rely on the backtest, because this backtest is just not realistic. As we saw, the swap in 2020, it was not like it is right now. So this is why we cannot really trust this test. And even though in the last few days or weeks, this strategy might have been profitable, and I think it was, and it might be profitable in the next few days or weeks, but we cannot know this for sure. The spread is always changing. We do have the overnight risk, which personally I think is the lower risk actually, but we do have these risks and we cannot really trust the backtest. So all of these factors they take a lot of trust that I had into the strategy when I first had this idea. So this is why I decided to not use it in a live account. So you're asking yourself, why am I still showing you this? I just wanted to give you a little insight in my strategy development process, how I work on this, what I find out, and actually how to code something that uses overnight swap rates or rollover rates. So in your next strategy, you can use this. And maybe you do not want to use the strategy as it is here, just based on the swap, but you could combine this with other indicators or other filters. It's still 100% legit to say you want to trade gold, swing trades, but only short trades. Because right now you have the positive rollover for short positions. So if you combine this, for example, with a moving average, and you say you always go short if the moving average goes down, and you only go short if you have a positive swap rate, but if the moving average goes up and you have a positive swap rate for long positions, you go long. So these are all kinds of strategies that you can use and combine them with a swap rate. And this, of course, not only works for gold. If we check Euro-US dollar, for example, we can see for Euro-US dollar also the short swap rate is currently positive. And also for, let's say, USD Japanese yen, if we check this, we can see the swap rate for buy positions is currently positive. So if you say you have a strategy and this strategy indicates a buy trend, you can definitely take the trade and even hold the position overnight because there is a positive swap rate. That's just some thoughts that you might include into your strategy development process, and I hope that I was able to teach how it's done. Again, this is the whole program, very, very simple, very, very easy. You can copy it line by line and do the same test on your PC. But always be aware that the swap rates here are unfortunately not stored in the historical data, and you're always testing with the current swap rate for this symbol. So that's it for this short tutorial. Hope you liked it and hope you can use it. So this is it. Thanks for watching. Have a great time. Good trades. I'm out. Bye.